Hi, everybody. Welcome to our webinar. My name is Amber. I will be hosting this webinar with Erica Berry and Erin Andrews. We are from Straight Line Inc. We are a full-service accounting firm in Plymouth, Massachusetts. So what are we going to go over today? So this law is huge. What is it? When does it go into effect? Who's eligible and what can it be used for? How are employer and employee contributions determined? What do employers need to be doing now? What should your payroll company be doing to help? How does it interact with other federal and state laws like FMLA? And what are the consequences of non-compliance and notice provision? So like I said before, law is constantly changing. This isn't intended to be legal advice. We're accountants, not lawyers. So if you have any questions directly specific to your business, feel free to contact us. We have some contacts with the state as well, but anything that you're wondering whether you can or can't do should always be run through a business attorney. And without further ado, I'm going to go ahead and introduce Erica Berry. She's going to be going into kind of the nitty-gritty parts of the law. She is our senior bookkeeper here and office manager. So take it away.
Hi, everyone. We're just going to get right into it. So Mass General Law, Chapter 175 established a system for paid family leave up to 12 weeks to care for a family member and up to 20 weeks for your own illness. The tax that pays for it is going to begin October 1st, 2019, so that is coming up very soon. Leave will be available beginning in January 2021 for personal leave and in July 2021 for leave to care for family members. Massachusetts paid medical family leave applies to all businesses and employers that employ one or more Massachusetts workers with limited exception. Employees are not required to complete a probationary period before granting leave, meaning you could hire someone today and they could apply for benefits and go tomorrow as long as they meet the financial requirements, which we will go over. Leave is also portable, so it's not employer specific. So this money does carry them from employer to employer. What employees or covered individuals are eligible for PFML? A covered individual is identified as one, an employee subject to financial eligibility requirements in all employment in Massachusetts, or a 1099 contractor if that contractor makes up more than 50% of the employer's workforce. Two, a self-employed individual who has elected coverage and reported earnings to the DOR. Or three, a former employee who met the financial eligibility requirements in all employment in Massachusetts at the time of separation and has not been separated for more than 26 weeks. Financial eligibility requirements are covered individuals must have been paid wages by an employer in the last 4 calendar quarters immediately preceding the claim for benefits, amounting to at least $4,700 and 30 times the weekly benefit rate. These are the same eligibility requirements for unemployment insurance, which some of you are probably very familiar with already. So how do you count this workforce? Counting covered individuals in your workforce. As a Massachusetts employer, your responsibility for making contributions under the PFML depends on the makeup of your workforce. To make sure you're correctly assessed for contributions, it's important that you properly report the size and makeup of your Massachusetts workforce for the Department of Family and Medical Leave. Your total workforce includes all Massachusetts W-2 employees, whether they're full-time, part-time, or seasonal, all Massachusetts 1099 miscellaneous contractors, which we'll dive into a little bit deeper, but this number is just going to be based off sole proprietors. So if you have any single member LLCs, C Corps, S Corps, partnerships, those will not be covered in your covered individuals. You will not have to make them part of your count. You'll always report on your total workforce numbers, but you're only responsible for submitting contributions on behalf of members of your workforce who are treated as covered individuals for the purposes of PFML law. A W-2, Amber's going to the next slide, I'm jumping ahead a little bit. W-2 employees will always count as covered individuals, no matter, and this is actually really important for people who have restaurants, because you're counting all of your W-2 employees. It's not an average count. So 1099 miscellaneous contractors count towards your total makeup total number of covered individuals only if they make up more than 50% of your total workforce. So you're going to add your W-2 employees and your 1099 miscellaneous contractors, which are sole proprietors only, and combine them. And a reminder, a contractor is considered a 1099 miscellaneous contractor if you pay them at least $600 in the tax year.
Just going to jump in here for a minute. So even if you didn't 1099 them, but you should have, they are considered in that count. Okay, so we've come into our first polling question. So we're looking, now that you've gotten a chance to kind of see how they're calculated, the way that we're handling it in-house is we're collecting, because this is based off of 2018. So basically what you have to do, you have to go through your 2018 W-2s and your 1099s, pull out the sole proprietors out of your 1099s, add them to your W-2 count, and that's how you get your total for these purposes. So when doing this, remember that it's not based off of the employees that you have now. It's based off all your W-2s from last year. So even if they only worked for a week and you let them go, they're included in that count because they got a W-2. So I'm going to go ahead and launch this poll now. I'm just curious as to how many of you guys hit the less than 25, over 25, or if you don't know, that's totally fine. Go ahead and click unknown. This is going to be the next few slides that we're going to be going over is who pays the tax. And this 25, this count number is so super important. And just as a reminder, a subcontractor is anyone that you pay for services over $600. Okay, so it looks like we have most of our votes in, so I'm going to go ahead and end that poll and share the results with you guys. It looks like the majority of you have less than 25, so that'll be a good thing. I mean, there's still a lot of things that go into effect. You're going to have to make sure your employees sign notices and make sure that you're withholding the tax from them, but the majority of you aren't going to see a hit as the employer. So I'm going to go ahead and stop this share, and we will go ahead and get continued.
Okay, so that's all a little confusing when you're trying to figure out who's counted and who's not. So we have come up with a couple different scenarios to help you better to determine this. So scenario one is you have one W-2 employee and you have two 1099 subcontractors that were sole proprietors, just an individual who's using their social security number to work for you on the side. So in this scenario, more than 50% of your workforce was made up with your covered subcontractors, so they are included in your count. You must remit contributions for all three covered individuals, but your total is under 25 covered individuals, so you are not required to pay the employer share. And we'll get into the percentages in the next couple of slides. Scenario two is you have 24 W-2 employees in the year of 2018, because this is how we're determining it moving forward. And you have four 1099 subcontractors that were sole proprietors, so they were not incorporated, they were not an LLC, these are just strictly sole proprietors. So in scenario two, less than 50% of your workforce was made up with covered subcontractors, so they are not included in your count. You must remit contributions for the 24 employees that your total is under 25, so you're not required to pay in the employer share. So you're just making this deduction from your employees. You do not need to count your subcontractors starting October 1st. And then in scenario three, you have 40 W-2 employees and you have 83 1099 subcontractors that were sole proprietors. So in this scenario, more than 50% of your workforce was made up with covered subcontractors, so they are included in your count. You must remit contributions for all 123 covered individuals, and your total is over 25, so you're required to pay the employer's share. We've been talking to a lot of business owners within our own firm and outside doing these seminars, and we come up with a couple of frequently asked questions, and one of them was, my company does not run payroll, but I pay subcontractors. Does this law apply to me? Yes, it does. Because you have 0 employees, W-2 employees, and you have paid 1 or more subcontractors, your subcontractors are considered covered individuals. And because they make up more than 50% of your payroll, because you did not have one, you are required to pay the tax on their behalf. This scenario tends to happen with people who own property managements. It could be a CrossFit gym where they just pay coaches that come and go. And they don't actually have anyone on payroll. So even if you do not run a payroll, this law does apply to you. Okay, next question was, how do I determine which subs need to be paid? So for now, what you need to do is you need to collect W-9s for each sub to determine their entity type. And you only need to collect tax for the sole proprietor. So what we've discovered with W-9s is the single member LLC and the individual sole proprietor box is in the same checkbox. So we actually have some forms that Straight Line here uses that we can share with everybody after the webinar. But this is something that you're going to really want to dive into. If someone hands you a W-9 right now and they have that box checked off, you need to ask them if they are sole proprietor or if they're a single member LLC. A great way to check this is by going to the Secretary of State website and looking for their entity type. If they have applied for a separate EIN, they could possibly still be an individual. So this is something you really, really want to pay attention to. So collecting W-9s now is super, super important. And this is going to help with collecting information for year-end for 1099s as well. Okay, so who pays? If you have 25 employees or more, your employer will be required to remit a contribution to the Department of Family Medical Leave of 0.75% of eligible payroll. This contribution can be split between employee payroll deductions and an employer contribution and will support both types of leave. They have split the family leave and medical leave into 2 percentages. So the family leave makes up the 0.13% of the 0.75. So up to 100% of the family leave contribution can be deducted straight from the employee's wages. The medical leave makes up the other 0.62% of the 0.75, and up to 40% of the medical leave contribution can be deducted from your employee's wages. Employers are responsible for the remaining 60% of the medical leave.
That being said, employers can, so this is the minimum, employers can contribute as much as they want to this. So if they want to pay part of the employee's portion or all of the employee's portion, they're more than welcome to.
And we've actually had some of our own clients who are seeing this as a benefit for their employees, where they don't want to have to make their employees paying any more tax, so they're covering the entire cost. It's you're not required to, but it is an option to not have the employee do it. But ultimately, you can take this out of the employee's pay and just contribute the 60% as the employer. Okay, so in the situation, if you have less than 25 employees, the employers must remit contributions to the Department of Family and Medical Leave, but are not responsible for remitting the employer's share. Family leave, it's still up to 100% of the family leave contribution can be deducted from the employee's wages. The medical leave is you're only deducting up to 40% of the medical leave contribution can be deducted from the employee's wages. Employers are not responsible for the remaining 60%. The employer can choose to contribute if they wish. So you do not have to pay on that remaining 60%, but you can still cover the employee's deduction as the employer if you choose to, but it's not required.
Just to be clear with that medical leave section, that 60% that you're not responsible for, it doesn't then go on to the employee. So that's, if you're under 25%, it's only 40% of that contribution has to be paid. Okay, so our next polling question is coming up. We're going to be asking who handles your 1099s, and I'm going to explain kind of the reason this is so important. So go ahead and I went ahead and watched the poll, so if you don't mind answering that. So basically the way that we've been seeing the biggest issue is that most payroll providers automatically generate payroll tax returns. So if we're not collecting the tax from our subcontractors through payroll, all the tax returns are going to end up being wrong, because you're going to collect tax in, your system, be it QuickBooks or however it is that you're handling your subcontractors, and payroll is going to be taken care of, all of your stuff for your employees, but they're only going to be making a payroll tax return for your employees. So if you're not paying your subs through payroll, all of your tax returns are going to have to be amended because they're all going to be wrong. Also, if you don't run it through payroll, chances are that if you pay your subcontractor, you're going to give them the total amount without withholding the tax. Most of us don't like to do calculations before we hand out a check. So that in that case, the entire contribution amount is going to be placed onto the employer, because, good luck going back to your subcontractors and asking for money back. So the way that we're doing it is we're adding all of our subcontractors to our payroll system. Now, that doesn't necessarily mean that they're employees now. They're still subcontractors. This is the only tax that's going to be coming out of their paycheck. But they can either get a paper check, they can get direct deposit, or, you could always send us over the amount, or send your payroll provider the amount that you would like to pay them, and they'll be able to give you a net amount and just run the taxes through the payroll. So most subcontractors normally get paid day of their work. This is going to require them to be paid with your normal payroll schedule, which honestly will help with cash flow regardless. So that's how we're handling it in-house. I highly suggest that if your payroll provider is not your accountant, that you make sure that you speak with both of them to see how they'd like you to handle this, so that they don't end up having to cause more work, amended tax returns, and ultimately your money. So it looks like almost everyone has gone ahead and answered now. So I'm going to go ahead and share those results. And it looks like 50% of you are outsourcing and 50% of you are doing it in-house. So if you're doing it in-house, you should be pretty on board. Everything's under one roof. If you are outsourcing and your payroll provider is not your accountant, like we talked about, make sure that everyone's in on the loop. And I am actually going to go ahead and bring Erin in on this one to discuss this a little bit further.
Just one other thing to note, even if you're under the subcontractor withholding requirement amount, like they don't exceed 50% of your workforce, you still are required to report their earnings that you pay them quarterly with those payroll tax returns with your employees. Or even if you don't have payroll, again, well, I guess technically, so, and you don't have payroll if you're withholding tax. But so it is important, if you're under the 50%, even though you're not paying or withholding the tax for those subcontractors, you still have to report those sole proprietor and 99 recipients quarterly and their earnings with the payroll. So either way, you have to screw up your payroll.
Thanks, Erin. So I know not everybody could hear her. She doesn't have the best mic in the world up there. I stole it. So basically what she is trying to explain is that all subcontractors, as of now, are hoping that some of these regulations change, but as of now, we're going to have to be reporting all subcontractors, whether they're included in your count or not. You just don't have to withhold any tax from them if they're not included. So no matter what, we're going to have to be reporting all subcontractors quarterly with your payroll. Okay, so moving forward.
All right. So employer liability and penalties. It's a really fun part of the conversation. Compliance is considered the employer's responsibilities. Please make note of that. Note that employers are responsible for remitting the full 0.75 contribution to the state paid leave fund, including both the employee portion withheld through payroll deductions and any required employer portion. So even if your business is not required to make any employer contribution, is ultimately your responsibility as the employer to make sure the correct numbers are remitted to the state. Failure to make the required contributions will result in a penalty to the employer of 0.75 of the employer's total annual payroll for each year of compliance or fraction thereof. That is a very hefty penalty, so please, please, please make sure you are in compliance with this law. Okay, so what is paid family medical leave and what does it do? What can these benefits be used for? So family leave, you can take up to 12 weeks with exception to bond with a child during the first 12 months after birth or after placement for adoption or foster care. qualifying exigency arising out of active duty or notification of impending call or order to active duty of a family member, to care for a family member who is a covered service member. This can be a 26-week leave, to care for a family member with a serious health condition.
So I'm going to kind of pop in here. So obviously in the last even just 6 months, this law has changed tremendously. So we are expecting a lot of the regulations on the actual taking of the benefits to be changing a lot as well. No one can take them until January of 2021. So what we're going to do is we're going to stay up to date on it, and we'll go ahead and provide another set of seminars and webinars, late 2020 once those regulations come out. So just be aware of this as we're going through it all. This is how it stands right now, but we're still, over a year away.
Okay. So the medical leave portion, you can take up to 20 weeks. This for a serious health condition of a covered employee, a spouse, a domestic partner, a child's parent, parent of spouse, parent of domestic partner, person who stood in loco parentis to the employees when he or she was a child, grandchild, grandparent, and sibling. And everything that's bolded text indicates an additional to federal FMLA. All right, so is certification required from the employee? Yes, when a benefit claim is filed, such claims shall include a certification supporting a request for leave. Certification deadline is 90 calendar days after the start of leave. Yes, you read that right. They can go out on leave, and they do not need to supply you with any type of certificate as to why they were taking the leave until 90 days after the leave started. So at the bottom it says more guidelines to come out on this before 2021, because I'm sure all of you are ripping your hair out right now as how that can be possible. But just always err on the side of caution and just grant the leave instead of fighting against the employee, because fighting for not giving them the leave, the lawyer fees and the penalties you could be receiving from the state are going to be much more than just granting the leave itself. So always err on the side of caution when someone is requesting leave. Just give it to them.
Yeah, normally when someone tries to go for any of the laws that we currently have in place, and if you were to deny that claim, for the most part, if they do qualify for it, it's not only lawyer fees, but it's also going to be treble damages. So whatever they should have been paid, you're going to have to be paying out 3 times. So like Erica said, err on the side of believing, go ahead and do it. And, you can always try to fight for that money back if that does happen. Keep in mind too, that employees can use vacation after. You can't make someone use all of their PTO before they go out on this law. So they can do this, come back, and then go and use their PTO. So it is a lot. We're hoping some of these regulations change, but that's how it is as of now.
Okay, so we're going to dive a little bit more into that. So if someone does apply for leave, the first 7 days of leave are not paid. Employees can use accrued sick or vacation or other PTO for those days. So while they're waiting for their benefits to come in from the Paid Family Medical Leave Act, they can use their PTO and vacation. They are not required to, and you cannot push them to do that either. So an employee or other self-employed or former shall be restored to previous position or equivalent position. So you cannot demote the employee, you cannot get rid of their position and give them a different one. They need to come back exactly where they were or something very equivalent to what they were working before. An employer cannot compel the employee to exhaust any sick, vacation, or personal time prior to or during leave, but no double dipping by the employee. So they cannot be on leave and take their vacation at the same exact time. Notice by employees should be at least 30 days prior to leave or as soon as practical if delay is for reasons beyond the employee's control. Administrative review available for an employee. An employee can appeal the denial of leave. The employer can appeal the denial of leave. Sorry, I'm reading this wrong. An employee can appeal the denial of leave to the Department of Family and Medical Leave. So if you deny it, they can appeal it, and then they'll probably get approved for it. So like we said, just let them take the leave and then sort it out after. All right, can employers opt out of Massachusetts paid family medical leave? Yes, employers can apply to the Department of Family Medical Leave to opt out of the statutory leave obligations if they have a private plan, which would be an insured plan with an approved insurer, or self-insurance requires a bond. So far, we have not heard of an existing insured plan that meets all the regulations that this is requiring. So if you think you do have that, you can absolutely apply and see if they will approve you to have your own private plan versus using their paid family medical leave plan.
Keep in mind that even if you do have a really good plan that gives them that amount of time off for all of those reasons, most of the time there's some sort of waiting period, be it 90 days until they get said benefits. This law does not have that. So just keep that in mind, that this would be any employee on day one.
And also, if you are required to pay in this tax for your sole proprietor contractors, most insurance plans are not covering your 1099 contractors. So your insurance plan would also need to be covering your 1099 contractors. So if you feel like you do have one of those plans or want to apply, go for it, give it a try, but you do need to meet all provisions.
And just to be clear, no existing short-term disability policy currently qualifies because there's no pre-existing conditions on this.
All right. Does paid family medical leave run concurrent with other laws, applicable state and federal laws? All right. So it runs concurrent with Massachusetts Parental Leave Act, the Federal Family and Medical Leave Act, and Massachusetts Earned Sick Time Act. It does not run concurrent with Massachusetts Domestic Violence Leave Act and Massachusetts Small Necessities Leave Act. So they can apply for those benefits and then apply for the paid family medical leave benefits as well.
So for the first three, you can't double dip. So they can't be getting both or get one and then the other.
Okay, so on or before September 30th, 2019, employers and covered business entities are required to provide written notice to their current workforce of PFML benefits, contribution rates, and other provisions outlined in Mass General Law, Chapter 175. The notice that you're providing to your employees, they can be done electronically, but they must provide the opportunity for the employee to acknowledge receipt or decline to acknowledge receipt of the information. If an employee declines to acknowledge receipt of the information for the purpose of enforcement, the Department of Family Medical Leave shall consider an employer or covered business entity to have fulfilled its notice obligation if it can prove all of its current workforce were provided with notice and the opportunity to acknowledge receipt or decline. So this is something you need to keep in your records. We've been hearing about the sick leave law, that they're auditing companies at this point now to see if they have these records on file. So it's very, very important that you are providing these to the employees or your covered individuals and you're keeping them on file. New employees must receive within 30 days of their first day of employment the notice. Contracted employees must be given notice when the employer enters into the contract for services. So when you are gathering that W-9, when you're hiring your sole proprietor contractor, make sure that they are signing this along with it. Notice must be provided to the employee in their primary language. Employer or covered business entity must maintain the written statement acknowledgement of receipt of the notice or the written statement indicating the employee's refusal to acknowledge the notice. The state website does provide these notices in several languages. So if you have 5 or more employees that speak a different language, then you must post this in their primary language.
Keep in mind too that refusal to acknowledge the notice, I know that's worded kind of funny and looks silly, right? If they refuse, you still have to withhold the tax. It doesn't mean much of anything. So you just have to give the notice. If they say, no, I don't want to read that, but I acknowledge that I don't want to read that, that suffices. Make sure that you get that in some sort of writing though.
All right, so notices are available for download provided by the Department of Family and Medical Leave, or you can create your own. Us here at Straight Line, we have taken theirs and added it to our new employee packets and our new subcontractor hire packets, so you can take them right off the website or put a different spin on it. There are separate notices for W-2 employees and 1099 contractors. When this law originally came out, they just had one for W-2 employees and one for 1099 contractors, but now they have 2 for W-2 employees if you are an employer that's 25 plus employees or 25 or below. Same thing with the 1099 contractors. There's 2 different forms. If you're an employer who's in the 25 plus, so the 25 below, you just need to give them the right form. So notice for both W-2 employees and 1099 contractors must include the following. This is if you're going to go off on your own. An explanation of the availability of family and medical leave benefits, the employee's contribution amount and obligations, the employer's contribution amount and obligations, the employer's name and mailing address, the employer ID number assigned by Department of Family and Medical Leave, instructions on how to file a claim for family and medical leave benefits, the mailing address, email address, and telephone number of Department of Family and Medical Leave.
We highly suggest just using the forms that the state provides. If you miss one little field on these forms, you're not going to be in compliance. So for me, I don't see the point in making your own. I just see you adding it exactly as is from the state to the packet that you normally hand out to your new hires and taking it fair there. Feel free to throw a logo on it if you wanted to match all the rest of your branding, but I would stick with the form that they have given that follows all of these, and so that you know that you're in compliance. That being said as well, we have not yet received guidance on whether or not, as first of all, when your amounts change, so how they're going to be doing a look back. Right now, the look back period is 2018. We're not sure how it's going to be handled moving forward, and we're also not sure if you're going to have to provide new notice if you do end up originally being in that under 25 and then falling above it somewhere along the lines. So that information will come out. As it does, we'll keep you updated and posted.
So employers must also display a poster, the Paid Family Medical Leave Mandatory Work poster. We have the example on the right. We will provide this also after the webinar, so you guys have links to it. This is right off the website, so it has everything that you need to be in compliance with the law. The poster must be available in English in each language, which is the primary language of 5 or more individuals in your workforce, if such translations are made from Department of Family Medical Leave. We have provided some links if you want to write them down, but again, we will provide this at the end of the webinar when we follow up. But if you can go right onto their website, and they have some really great information and posters right there for you. So penalties for notice of violation. So on top of the 0.75, if you are, for your total annual payroll, if you are in violation of that, the first violation is going to be $50 per employee or contractor, and then subsequent violations are $300 per employee or contractor.
And like she said, that is in addition to that percentage of your entire payroll for the year. So if you're not in compliance for any of this, it's not only just for, the portion of people that you weren't withholding the tax, it'll be for your entire payroll for the year, including your subcontractor amounts.
Okay, so we just threw quite a bit of information at you guys. So here's a quick recap on what actually needs to be done now. First thing you should be doing is contacting your accountant and your payroll provider to determine correct numbers of covered individuals and determine your company's contributions. Please note your payroll provider will not have the complete information necessary unless they also handle your 1099s. Most payroll providers do not handle the 1099s. Your accountant may do that for you. You might do it in-house. So it is really important that you are doing a joint effort and making sure you're getting these numbers correct. You need to prepare the notices to employees and contractors and obtain signatures of acknowledgement or not acknowledging it by September 30th, 2019, so that we're just about a month out from there. You also need to post the required posters in your office to be visibly seen by September 30th. If you are not currently running payroll, if you are, this is all being done through Mass Tax Connect. So if you are not currently running payroll, you will need to register for the necessary tax agency if you are not currently running your payroll. And you're going to begin payroll deductions on October 1st, 2019. So everything needs to be signed by the 30th, and then the next day is when the deductions begin. So please stay tuned and check in with your attorney and payroll provider as additional regulations and guidances become available. They are coming out daily at this point. And they're really great about answering questions right on the website. So if you have specific questions, obviously you can reach out to us. But if you have more questions that you want to ask directly to the state, they do have a contact there too.
And we are trying our best to post these new updates as they come. So, if you want to go ahead and follow us on any of our social media accounts, you can follow us that way as well. And we'll be posting updates as regularly as we get them. If you guys are all asking, similar questions and we get the answer to it, we'll go ahead and post that as well. So we'll try our best to keep everybody updated. And that's client or not. We're here for you regardless of whether or not you're one of our clients. So feel free to reach out to us ever with any questions. We are going to go into a questions section now. So this link down here that we're going to provide to you after this webinar is to ask the state directly a question. So if you have something super specific that you want answered for your business, of course you can ask us, but you can also go directly to the state by clicking on this link. So if anybody has any other questions, go ahead and pop them in the Q&A section and we will get them answered for you. Some of the ones that we've already received is what is the website to get the notice provisions. We're going to go ahead and send those over to you directly, as well as copies of the notices. So after this webinar, you will receive copies of all of those notices directly to your email. Someone was wondering about penalties. We did go over that afterwards, but it's $50 for the first instance and $300 on the instances after, as well as that percentage of your entire payroll for the year. And then we did have a question here. If you're under the 25 limit, but also have 1099 miscellaneous, what is required to provide for those 1099s? So like we said, you do not need to withhold tax from them, but you are going to have to report their wages. We're thinking for the most part that this is happening because the state is trying to reclassify your 1099s that really should be employees. So normally if someone's incorporated, of course, they're not going to be an employee of yours, but if they're not, then are they actually a subcontractor or are they not? So I think this law is, of course, a good parts of it, the law is to be able to provide someone maternity leave if they work for a small business and they can't get it, help out family members that are sick. Of course, there's all that, but I do think the underlying fact of this is try to make sure that people that are being 1099'd should not be employees that are getting regular tax taken out of their account. And we have a few more questions here. So if we have over 56 employees and maybe 10 subcontractors, will we need to include the subcontractors in our numbers? So no, because that 10 is under 50% of your entire workforce. So you won't have to include those 1099s in your numbers, but you will have to still report their wages to the state as of now.
You will not have to provide them with anything like a notice or anything like that to the subcontractors. You only need to provide that to your W-2 employees at this point.
Yes. And then we have another question here from Bridget. Are there two taxes, one for family and one for medical? Yes, you'll see those be hitting the account separately. So you'll see it in you'll see your FICA, your mass unemployment, your federal unemployment, your mass withholding, federal withholding, and then you'll see your family leave and your medical leave. And they are separated out there for you. Are there any other?
Can you hear me?
Yeah, we can.
I fixed my mic. Okay, cool.
Woohoo. Welcome, Erin.
Hi. I just wanted to go back to that, just to reiterate what Massachusetts considers a subcontractor. So, because this is super confusing, I actually called the state again this morning just to get clarification. A subcontractor, according to Massachusetts, is anybody that's considered a sole proprietor. So if you're doing your counts and your counts includes, you have 14 subcontractors, but 10 of them are corps or an LLC. So an S Corp, a C Corp, or an LLC, those are considered entities. You exclude them automatically from your count. So therefore you'd only have 4 that are considered applicable to this law. And in Mary Beth's question, in Candace's question, so 10 subcontractors, that depends if they're sole proprietors or not. Even if they're under the 50% of your workforce, you still have to report their earnings as a sole proprietor quarterly with the rest. So you're not withholding tax and you're not notifying them, but you do have to report their earnings and that subcontractor.
The other thing that I called the state about today to get clarification on, which, surprise, surprise, they have no information on, a lot of subcontractors, they bill out, and according to the IRS guidelines for issuing 1099s, you actually have to report to the IRS in a 1099, not only labor paid out to that sub, but also materials paid out to that sub. So when you're reporting these figures, are they expecting us to report materials and labor combined that was paid out? I mean, I don't understand how subcontractors are going to break that out. Obviously, some subs are increasing the price of materials, and then how is that supposed to be, provided, that information provided to the payroll provider or your accountant? The woman I spoke with this morning said that's the first time she's ever heard that question come up, and obviously I think it's a legitimate concern. A great example is a lot of subcontractors, maybe the job is $30,000, but only 5 of it is labor. So what are you going to withhold tax on $25,000? That doesn't seem very fair. And to have them break it out is kind of crazy. So they do strongly suggest submitting questions. Oh, can you guys not hear me? Oh.
I can hear you okay. I'm not sure
Okay.
if anybody else can.
Oh, no. Okay. Mary Beth, can you hear me? I'm sorry. Am I still muffled?
No, you sound okay in this end, Erin.
Okay, I just wanted to make sure. And then the specific questions regarding all of the percentages is very, very confusing, to be perfectly honest. You have to almost lay it out and map it out and really sit down, do your numbers, and then sit down with somebody that knows what they're doing. We really do not recommend somebody do this at home by themselves, not at home, I guess in your company, but the percentages are very, very confusing based on the employer account.
We do have one more question here from Mary Beth. For sole proprietors and small corps with only one shareholder and or spouse, are they exempt? And no, if you're currently getting a W-2 for your own company, even if I was employed by myself and I was the only person on payroll, unless I have a plan that is as good as what the state is offering, they are not exempt. You do have to withhold the tax.
With that being said too, if you are a sole proprietor by yourself, you don't sub out any work. So let's say you just work from home and you do social media and you don't sub out anything and you're a Schedule C, a sole proprietor, you don't have to pay in any tax for anybody else, but you can actually opt into the program to withhold tax on yourself and pay in. And the calculation on that would be kind of weird. I guess it would be, I don't know if it would be based on your gross. It would probably be based on your gross income, I assume. I don't know. Probably a good question for the state, but it's actually probably not the worst program to opt into. I probably would consider it if I didn't have to contribute already, based on, getting medical leave later on, and especially as a small business, most of us don't have some type of benefits in case something happens to us.
It's a really great point. So unless anybody has any other questions, I don't see them here. We're just going to dive in a little bit as to what we do and what we can do to help you if you're looking for that. So how Straightline can help. We call it BOSS, like a boss. You'll see our hashtags around. It's short for back office support system. So it's fully cloud-based, and we're taking over your entire back office, or as much of it as you want. So we do work a la carte as well. We make sure that we provide you with all the information that you need 24/7. And like I said, it's all cloud-based, so your information's there no matter where you are. We offer general ledger support, payroll, accounts payable, tax prep and tax planning, coaching, sales tax, 1099s, anything really in this world of accounting. So if you guys have any areas that, maybe you do your payroll in-house right now, but this law is intimidating and you're not feeling it, feel free to reach out to us for anything, or if you have more questions about what we do or how we can help you. I'm going to go ahead and pop up a final poll here. It is just to see, feel free to not answer if you don't, and this is completely confidential. We're not going to share this at the end of it, but if you're looking for any more advice on the law or information on any of the services we provide, go ahead and select yes there, and we'll make sure that we reach out to you directly. I'm going to go ahead and give you guys a little bit of time to answer. And like I said, it's a free consultation. We can go over the law with you a little bit more in depth as to how it's going to affect your business. And there's no need to use our services after. It's like completely free, just to help out, our local businesses. We want to make sure you guys are taken care of. Going to give it another 20 seconds or so. Awesome. So like I said, we're here for you, client or not. Feel free to contact us. This is our general mailbox here, our phone number, and our website if you want to keep up on the new laws. We're trying to post our blogs and make sure that we're getting all that information out for you guys. We will be recording the webinar and publishing it there as well. So if you have any friends or fellow business owners that you need or you think that this would be good for, feel free to send them over to our website. We're also going to be scheduling at least one more webinar in the middle of September, and hopefully an in-person seminar as well here in Plymouth. So we will be offering more up-to-date information as it comes out. The state told us today that all the regulations will not be out until September 30th. So I'm sure we'll have some new changes coming through. And like I said, follow our page for updates. And Erica or Erin, is there anything you guys would like to add before we finish up here?
The only thing I want to say is thank you for attending, and we do our best to try to educate our clients and empower our clients to know the laws and make themselves aware of what's going on. If you guys know of anybody that is a small business owner or a manager, a lot of times with these kind of laws, people rely on their accountants or their payroll providers to sort of take the reins and do this for them. But as you can see, as you've heard, this is not something that can be just relied on by your professional. Stuff has to be done internally, and there's little to no advertising about this or marketing, quote unquote, in the news. So it's a very unknown law, and it's going to come up quickly, and it's going to really slam employers, unfortunately, right around the busy, holiday time and all that. So we just want to educate and get the word out as much as we can to help small business owners and small businesses like our own. So thank you very much for attending. We really appreciate it.
Thank you all so much. Have a great one.